Hi everyone, welcome to Channel Name. Today we're diving deep into Infosys, the Indian IT giant. Can its stock reach $1,000? We'll cover its pros and cons, profit margins versus competitors, debts, dividends, future plans up to 2050, risks and returns compared to Nifty 50 and S&P 500. Stick around for a balanced 2025 analysis. Let's get started. First, the big question. Will Infosys hit $1,000? As of September 2025, INFY trades at about $18 on the NYSE with a $72 billion market cap. That's a 55x jump needed, highly unlikely in the short term. Infosys is a leader in IT services, AI and cloud, with $19.5 billion in revenue. But growth is steady at 4 to 7% annually, not explosive. Long-term, possible with an AI boom, but a realistic target is $25.30 by 2030. Infosys has strengths: global reach in over 50 countries, strong cash reserves of $4 billion, and innovation in AI via Infosys Cobalt. Its India-based cost advantage keeps margins competitive. Weaknesses: 60% of revenue comes from the US, so recessions hit hard. Talent churn is high at 15 to 20%, and US visa issues persist. Opportunities include the digital transformation market growing 10% yearly, and an ESG focus aiming for carbon negative by 2030. Threats: geopolitical risks like US-India trade tensions or economic slowdowns cutting IT budgets. Infosys's net profit margin is 16.4% TTM, with an operating margin of 20.9%. It's stable but flat, dipping 0.24% in 2025 due to rising costs. Compared to rivals, TCS leads at 25%, Accenture is similar at 15 to 16%, Wipro lags at 10 to 12%, and HCL Tech is close at 15%. Infosys sits in the middle but needs AI to boost margins. Annual margin changes are minor, around +3%, with competition keeping pressure on. Debts: Infosys has minimal debt at $989 million, with a debt-to-equity ratio of 8.9%. It's easily covered by $4.2 billion in operating cash flow, over 4x the debt. Free cash flow is $4 billion, so yes, they can pay it off comfortably. Side incomes, like $74 million from interest and investments, make up just 0.4% of revenue. It boosts the $11 billion equity slightly but has a minor impact overall. Since its 1993 IPO at 95 INR, Infosys stock is now 1540 INR, a 16,000% return, or 40% CAGR. Early investors won big, but the last 5 years returned only 8%. Looking ahead, Infosys's 2030 ESG vision targets carbon negativity and skilling 18 million people. By 2040 to 2050, expect focus on AI ethics, sustainable tech, and quantum computing. Investments are $2 billion yearly in R&D for cloud and AI promising, but execution is key. Risks include geopolitical issues like US visa restrictions, which could cut revenue by 5 to 10%, and talent wars. Upsides: India's digital boom and ESG demand. Dividends yield 2.9%, with a 66% payout ratio and 16% 5-year growth. Reliable, but not a dividend aristocrat due to non-S&P 500 status. Short-term returns: 1 year plus 11% lags Nifty's 44% and SP's 19%. Long-term 10-year, 12% versus Nifty's 14% and SP's 13, solid but not top tier. Infosys is a steady long-term play, not a moonshot to $1,000. Buy for dividends and AI exposure. Like and subscribe for more stock deep dives. Check sources in the description.